your mind? Do you feel like you might be paying too much? Would you like to double check and make sure? We're going to be talking with John Kuykendall from GulfCoast Financial Services on the call today and talk over proactive tax planning and management strategies. You can reduce your tax liability. John's here to show you how. On Financial Focus, brought to you by the best of the best in financial services, Gulf Coast Financial, as named by the readers of the Lake City Reporter. 9 straight years and running. John, it's a lot to keep up with. The time keeps moving by and you keep getting voted in. Been serving North Central Florida savers and investors, proactive planners for now more than 31 years. And in part of the planning process, helping them to not only manage their investments and grow their assets, but also keep more of that money in the long run. That's what proactive tax planning is all about.
Oh, that's right. You know, we when we're working, we really don't think about taxes. It's taken out of our paycheck. We learn to live on what we've got, that and credit cards. And so, you know, we don't really think about how much taxes am I paying or how it's going to affect me down the road. And so, Peter, all of a sudden we retire, and then taxes become one of our major concerns because it's one of our biggest expenses. I mean, here we are in partnership with the government because now they own part of my 401k, my my IRA rollover, all of my deferred accounts belong to me and the IRS. So it's not a fair partnership.
John, I know you mentioned the credit cards a little tongue in cheek, but isn't it ironic that we do have so much of a problem when we receive the paycheck, when we think about the taxes? Oh man, the government, they took 15 or 20% of my money, but it doesn't seem like we have any problem buying things with the credit cards that are going to charge us 22, 24, 29% interest.
Well, that's right. We don't think about it. We know it's the credit cards are there. They're very handy. It's very easy to get too many of them, and so we never want to spend within our means. We want to spend on what we want, not what we need or what we can afford. And that's one of the things that we teach here is budgeting, how to budget during retirement, and how to budget prior to retirement so that we can have the kind of retirement we want. Peter, they're changing the laws so fast with the government, the debt rising, and the government needing more and more money. The Secure Act 2.0, I don't think people yet understand what we're going to do to our beneficiaries. The spouses and certain classes, minor children, et cetera, will be taken care of. They can extend it, that inheritance, those inherited 401ks and rollovers. But those that aren't have to take that over 10 years. And that's going to take a tremendous tax burden and add it to their already existing incomes. And so they are going to be paying a lot more taxes. It's really a catch-22, Peter.
Why would we set ourselves up to pay a higher than necessary tax bill? And John, I say that in reflection of the fact that this generation for the last 35, 40 years has been taught to save in those 401ks you're talking about, those IRAs, those tax deferred accounts. And by nature of the very way that we have been taught to save and invest money and grow the retirement nest egg, we have in fact done just that. We've set ourselves up to pay the highest tax bill possible in retirement, and when those accounts eventually are passed to next generations at that point as well. So it's a little bit of a catch-22, but we are in a very strategic window of opportunity, I believe. And you help people realize that opportunity there at GulfCoast Financial Services.
Well, surely, Peter. I mean, the thing about it is prior to age 65, prior to getting on Social Security, Medicare, there are some things that we can do to go ahead and do Roth conversions, convert those over to tax-free accounts, buy some life insurance, do different things with the money that we've set up deferred. Go ahead and pay the taxes on it and invest it in other means. But after we're 65, Peter, what I found out, it's really difficult to do those Roth conversions because it affects so much. As you know, up to 85% of our Social Security can be taxed based upon how much money we earn. And those withdrawals from those 401ks and rollovers are an income, and therefore they're taxable. So we have that problem. Also, Medicare, your Part B goes up based upon the amount of money you make. And so we pay higher there. Our drug cards, Part D, also goes up because that's indexed for income. So what's happened is, as we have changed these rules over time, legislatively changed the rules, we have not taken advantage of what we needed to do. We've kind of lackadaisical. We go into retirement. And, Peter, that's why I say retirement's not for wimps. It is made for winners. And so we have to be proactive and not reactive. Now, if you're doing, right now we're in the middle of tax season, everybody's worried about taxes. Everybody's worried about how much they're going to have to pay or how much they're going to get back. And that's already happened. 2023 is over. What we should be doing now is planning for 2024. We should be planning to make sure that we have done everything we can for this year and in 25 before the tax laws that we currently have sunset January 1st of 2026.
Well, I know that is that window of opportunity, and John, that the first several years of retirement, our income may be a little lower, a little different, certainly, than our working career. There is a process of figuring things out the first couple years of retirement, but there is also that window of opportunity. However, I want to ask you this. It's an axiom that financial and retirement planning has been based on for decades, for the last generation. Will taxes in retirement actually be lower? Is that a premise that we should be basing our planning on?
Well, Peter, I think so far what we've proven is that taxes are actually higher in retirement. They're one of the major expenses we have. Taxes are going to continue to go up. More and more of the Social Security, the Medicare that we pay, is going to be indexed for our income. And so we're going to have to take a bigger chunk of that and pay it ourselves out of our retirement. So therefore, we need to make sure that we have done the best tax planning we can. Taxes are not going to be lower. They're the lowest, but they're on sale right now, Peter. They're not going to be lower. With the government debt we have and with the interest rates we're paying on that debt, there's no way in the world that the people who have set aside money for their retirement and have tried to save so that they could have a good retirement, that they're going to pay less in taxes. It's not. We may pay the same thing in taxes, but we may have to make up more of our Social Security. We may get less of a check. We may have to pay more of our Medicare bills than we're paying right now. I mean, we've been blessed, but this picnic's coming to an end, and we need to really do some proactive planning because we've only got a couple of years, Peter. And if you're close to retirement or you're not 65 yet, there's a lot of things that we need to do now.
Yeah, and I like how you did slip in the book title there, John. Quitting is for winners, but retirement is not for wimps. Of course, is the latest book by John Kuykendall there, and you can pick up a copy at GulfCoast Financial Services or give a call 386-755-9018 if you would like to receive a copy of Quitting is for Winners, but Retirement's Not for Wimps. Again, 386-755-9018, or just drop by GulfCoast Financial's office. But John, in that book, you talked about the challenges that are presented, especially with the complexities of the tax code, the potential changes that we may see into the future. There really is an order of operations of how planning should be cohesive and complementary between the financial and the tax side. And that's one of the main advantages, I believe, there at GulfCoast Financial Services, with the sister company under one roof where you do the tax prep for clients, Gulf Coast Tax Advantage.
Well, that's right. What we try to do is when we do planning, we try to do a holistic look at everything that's going to affect you during retirement: estate planning, tax planning, Social Security planning, Medicare planning, and then, of course, always financial planning. But the assets are certainly we need to plan how we're going to allocate our assets and how we're going to have our money. But it's just a minor part of the overall complexity of the wheel, Peter. Without, we can't have a round wheel if we're only planning for one side of the wheel and we haven't planned for the whole wheel. And
a bumpy road ahead for sure.
oh yeah, I mean, yeah, and there's only so many things that we can do after we reach 65, Peter. And the thing about it is the latest statistics. We're going to have a tremendous amount of people reaching 100 in the United States in a very short period of time. So as people continue to age longer and we're in retirement longer and we're doing things longer, we need more money. We need to make sure we have all of our ducks in a row and we've taken care of every dollar we can get. In retirement, nobody's paying us. We're paying ourselves. And so if you're not doing your best job of tax planning, then you're giving money to the government, but you're not getting anything in return. So we have to do planning.
Well, there are some key critical benchmarks, milestones, or life events, John, that mark some significant opportunities. If you leave a job, if you turn 59 and a half, I know they've moved the RMD age up from 70 and a half, but that might still be a pretty significant opportunity as well for charitably inclined individuals with IRA accounts. And then, of course, at 73, at least currently, they'll change the laws on that as well, is when those required payments from your IRAs and tax deferred accounts begin if you are not already satisfying the IRS.
Well, that's right, Peter. The thing about it is whether you need the money or not, you're going to be taking it out and you're going to be paying the taxes on it. A lot of people don't realize that. They think that that money is already, it's theirs. They're not going to pay taxes on it. They don't understand that they've got to pay taxes on it because the government wants their money. And so we have to take advantage of those opportunities you talked about, such as the charitable contributions. That's a fantastic way to give money to charities with pre-tax dollars and keep your after-tax dollars in your pocket. And so we try to take advantage of that. And we can do that now up to $100,000. So there's a lot of ways to give money to charities and not take those RMDs if you don't need them.
Yeah, some ways to give to charities, churches, schools, organizations are better than others, ladies and gentlemen. And certainly at 70 and a half, you've got an opportunity to utilize one of those better than other strategies with those charitable contributions from your IRA. It's called a qualified charitable distribution, or a QCD in our acronym loving world. But that is an opportunity that you can do, but you don't want to make any mistakes on. So you may want to consult with a experienced qualified professional on that. Again, John, tax-free money, one of the very few opportunities for truly tax-free money. I like those words in combination, something that we should try to take advantage of. But talk to us, if you would, about the age 59 and a half, because specifically that is a place where we can take more control over our financial and retirement future and maybe begin to move things a little bit more proactively, even if we're still working after 59 and a half.
Well, yeah, if we've got a 401k or a deferred comp plan, and we're 59 and a half, Peter, we have the opportunity and availability to pull that money out of that 401k and manage it into different other options, such as annuities and more diversified investment opportunities. So it's certainly a way that we can get better control over our 401ks and our deferred comp money. And, so many people really don't manage that like they should. And when we get to be 59 and a half, Peter, we're going to be needing that money very soon. We can't afford not to manage it properly and diversify it into some of the other options where we can pick up a lifetime income or pick up some long-term care benefit.
John, do you feel that if individuals, savers, and investors, if couples are overlooking the aspect of forward looking, proactive tax planning that they could be missing the boat here on one of our best financial opportunities?
Well, sure, Peter, and unfortunately, most people do because they're like I said, we get a paycheck. We're not focused on taxes. We're focused on how much is going in my checking account so that I can spend it. And so we're not really looking at how much taxes I'm paying or how I'm going to pay taxes in the future. What we should be doing is sitting down and analyzing our taxes and figuring out, you know, should I be putting money in that 401k or should I be putting it into the 401k Roth option I have, pay the taxes now? That's just one example. There are a lot of things that we can do that we're not thinking about.
And I've heard a lot of misconception and confusion there as well, John, that if we choose the Roth, then somehow we miss or forego the company match that we would have otherwise received. That is not the case, right?
No.
If we make contributions and the company offers a match, they still must match. We are just proactively choosing to prepay the taxes on our side. They're probably not nice enough to do that on their match, but they still must offer that match and make that matching contribution, correct?
Well, that's right. They must make that matching contribution. It's part of the plan. But what we're doing is we're saying, hey, look, I'm going to take the taxes and pay it now on the dollar that I'm putting in, not on the $4 or $5 that's going to come out. And so I go ahead and prepay my taxes. It's certainly a great way, Peter, to pre-plan and prepay. I get the taxes on the seed, not on the harvest. And so it's just a biblical way of doing it. And it makes so much sense when we look at what taxes are going to be in the future.
Strategic opportunities do exist, ladies and gentlemen, to control your tax bill now. Will they be around forever? We don't know because, John, another issue and risk in this largest potential retirement expense of taxation is the potential that the government can change the tax code and therefore change the bill and ultimately what they collect in taxes from our retirement nest egg. So maybe realizing and seizing this opportunity now is one of the best things we can do.
Well, if you look back to December of 2019, you saw what happened. Secure Act 1 came out and it changed the way we get to stretch our IRAs. So the taxes are due sooner, 10 years if you leave it to a beneficiary who's not one of the qualified ones. So, that was something we hadn't expected. We never thought about that. Nobody ever thought that they would do that. Who says they're not going to change something else? Legislative changes are happening all the time, and we need to be aware of it. Because if we don't plan now and plan for what's going to happen, we're going to be hurt without the kind of retirement that we need. And, Peter, one of the worst things that most people worry about is that I'm going to run out of money in retirement. So why not be worried about it now instead of after you've retired and you're not getting a paycheck?
Well, as much as we worry about that, prepaying the taxes is essentially, John, the equivalent of saving more. And it's, to me, in my opinion, easier to pay a bill while we're earning a paycheck rather than try to work to manage that bill out of the finite amount of money, the limited resources that we have the day after we retire when we don't know how long we need that money to last. And circling back to Congress and the government, as much as they argue, as much as they fight, as much as they seem to not be able to agree on anything, they certainly agree that they like spending money. And eventually that's got to equate to higher taxes in the future, in my opinion.
Well, yeah, I mean, the government's not going to, there's only two ways we're going to pay the debt and keep the government going. They're going to cut spending or they're going to raise taxes. I don't see them cutting spending anytime soon. President Biden just came out with a new package, a new budget where he's giving away more stuff. So somebody has to pay for that. Why not plan on how you're going to take care of your portion now when it's best tax advantage to you than later when you don't have any control over it?
Get a jump on this, ladies and gentlemen. There is opportunity for you to determine your tax destiny, for you to control your tax bill. You need to look at it from both the financial and the tax planning perspective. John Kuykendall and the team there at GulfCoast Financial Services and GulfCoast Tax Advantage can help you do just that. If you would like to have a review of your investments, your retirement accounts, your tax forecast and outlook, pick up the phone, give them a call, 386-755-9018, 386-755-9018, 386-755-9018. John, taxes, just one of the reasons that even though quitting is for winners, retirement's not for wimps.
That's right, Peter. I love the title of that new book. But it's true. Retirement's not easy. Retirement is a lot worse than I thought it would be. And I'm still working, but I'm faced with all those retirement rules, and I'm paying the penalties for not having planned better because I didn't know. Everyone said forever that taxes would be lower in retirement. It's not. So let's take advantage of the things we can do now to do better, and let's get those plans going. That financially focused income plan covers everything you need to know about retirement.
And of course, always deal with an experienced, qualified professional in executing any financial, tax, or legal moves. And that's why the team from GulfCoast Financial Services is there as your resource, ladies and gentlemen. Pick up the phone, give them a call, 386-755-9018, 386-755-9018, or drop by and pick up a copy of John's book, Quitting is for Winners, but Retirement's Not for Wimps. They'd love to see you there at GulfCoast Financial Services. And John, we always love seeing you here on Financially Focused.
Thank you, Peter. It's great being here. Have a good week. Hey, if you'd like a copy of our new book, Quitting is for Winners, but Retirement's Not for Wimps, I encourage you to click the link below and get your copy today. Hey, we like it when you listen to the show, but we like it better when you like, share, subscribe, or feel free to leave a comment.
Be sure to like, subscribe, share, and tune in for more financial focus by visiting GulfCoastFinancial.net. The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. John Kuykendall is registered with and securities are offered through Kovac Securities, Inc., member FINRA SIPC, found online at www.kovacsecurities.com. Advisory services are offered through GulfCoast Financial Services, Inc., a registered investment advisor in Florida. GulfCoast Financial Services, Inc. is not affiliated with Kovac Securities, Inc. or Kovac Advisors, Inc. Past performance is not indicative of future results. All investing involves risk. Investment decisions should be based on your own goals, time horizon, and tolerance for risk. Due to various factors, including changing market conditions and/or applicable laws, the content may no longer be reflective of current opinions or positions.